But let's focus on M&M, the kind of uptake that you've seen in the tractor sales. What with the rural recovery at play? What is the number crunching, data crunching looking like? Pankaj has more details on that. Pankaj?
Well, thanks for that, Aisha. If you just look at the rural market, it's been pretty strong, and within that, tractor particularly has started to give early signals. Just look at this graph and this bar graph, and you will see that FY17 and 18 has seen a 22% growth, plus a 22% growth. FY14 has seen 22, but when the decline happened, it was just close to about 10 odd percent. So overall, in 5 years, there has been a growth of greater than about 60 odd percent as far as M&M tractor volumes is concerned, which is quite significant, which is quite high considering the penetration of tractors is not particularly that low. Within that, if you look at the company-wise share, or what's happening in the company-wise, M&M has got the largest share, so it's got the lead indicator, or it is a sector-moving number. So when we saw that the last 2 years have done particularly well, this is also one company that has been driving the sector growth. But the outlook still continues to be strong. The key triggers are that rural market demand still continues to be strong. Most of the triggers that most of the companies, most of the sentiment indicators have been indicating seem to be strong. Regulations as well as policy are on the favorable side, as in there is no particular intervention, plus interest rates are as low as they could get. Probably they have increased in the last few months or so, but really it's not quite much. If you look at it on a 3-year basis, it's definitely come down. The big thing is now that what will be the hike in the minimum support prices, that always has an impact on the agri space, plus we are into an election year. So what sort of rural spending happens, that's also something to watch out for. So things are looking good. The base is high, but for the last 2 years, the sector itself has grown greater in double digit. And this year as well, the expectations are it's pretty strong. M&M, which is the sector leader, has been moving this particular move. Okay,
Pankaj, thanks for that impressive analysis and all that M&M has achieved. In fact, on that note, who better than Rajesh Jejurikar, the President Farm Equipment Sector, member of the Group Executive Board at M&M, joining us right here in the studios. Rajesh, good to meet you in person, and thanks. Glad that you could take time out and joining. Pankaj has said it all, like you said, but a 10,000 crore rupee addition in market cap since the start of the year. Is that rural recovery that Pankaj just highlighted for real?
Yeah, so let me focus on the rural recovery rather than
the market cap addition,
which are outcomes, I guess. So we have seen a very clear rural recovery, especially in the last 2 years. One has to see this, of course, contextually from the standpoint of 2 bad years of monsoon and drought which happened before that, right? So if you now look at what is driving rural recovery, as Pankaj said, it is positive monsoon and positive sentiment around monsoon. There is greater support going in from the government standpoint, but most importantly, we think it is the rural infrastructure drive, which is actually not agri ministry but rural development, which is bringing in a lot of non-farm income. And the non-farm income is overall raising the prosperity of rural consumers, which in a manner of speaking then leads them to keep part of that money in an asset class which they value. And tractors is certainly one such asset class, right? So, it's a combination of the fact that farming is being looked at positively and that there is money flow in from the non-farm spending side.
To put it very simply, if I look at the contribution of agriculture as percentage of GDP, that number is not a very promising number. That number over the years has only contracted. So if I look at the aggregate farm activity, the farm activity is not expanding in line with our GDP estimates also. So there is a bit of a macro challenge here. I mean, the big picture is not encouraging.
So agri GDP, I think, is expected to grow and has been growing in the region of 3 to 4%. Right now, that's lesser than the average GDP growth. But I don't think that's the right way to look at rural India. And the reason for that is there is a significant amount of income that gets generated non-agri in rural households, right? So it's very often we try to compartmentalize these as 0-1. But think of yourself being in a rural household, living in a village. It's typically a joint family, and there are multiple sources of income coming into that family. Somebody in that family is running a shop, maybe a grocery store, or maybe a cement dealership, or somebody else is working in a government role close by. Somebody else is doing, construction work, and then there's farming income. So when you look at the services growth as a part of GDP, a lot of that is playing out in rural India as well. So, don't look at rural India as it's agri or nothing.
No, my only follow-up, Rajesh, is in, we often say, okay, if we've had a positive monsoon, that would translate into tractor demand. How strong is that correlation on the ground? I mean, does tractor demand really be so dependent, or is that a theory that you can debunk, saying that there are other factors driving demand as well?
Certainly, it's not only monsoon. It's an important factor because it's a combination of, like I said earlier, it's a combination of what's going to happen with monsoons and what's the overall income level in that place, right? So, suppose you say monsoons are not going to be good, farming outlook is not positive, but there's money flowing into the rural economy. That consumer is less likely to invest in a tractor asset class at that point of time because they can afford to wait or postpone to a time when they see an upswing in farming. But when both are happening at the same time, that means you're seeing an upside in farming and you are seeing cash flows coming in, either from farming income or non-farming income, then you're more likely to say, let me invest in an asset class which is useful to me today.
Yeah. Analysts are valuing your farm equipment business twice as much as your auto vertical.
Right.
Do you think they're on the right track by doing so?
Frankly, don't want to comment on that. You know, this is our quiet period, so best to stay away from.
No, but are they in the right direction? I'm not asking for any numbers.
I think they're in the right direction from the standpoint of saying the farm equipment is a great business to be in. I'd rather not be comparative about it.
I'll also like to talk about how do you think FY19 will be different than FY18. Again, we are not talking about a specific comment on how things have moved for the quarter gone by, but in terms of trends, in terms of inventory levels, in terms of new launches, exports, how do you think this year will be different than last year?
Yeah, so that's a lot of set of questions in one go. So let me try and break it into 2-3 different themes. For the domestic industry, we look at an industry growth of 8 to 10%. Okay. So we've spoken about that earlier, and that's still our view right now. We may have a different view at the end of June, like we normally do. We do recalibrate once we see the final outcomes of monsoon, but our view right now is 8 to 10% industry growth for the coming year. We have through last year brought our dealer stock down by 5 days, and we've spoken about that earlier too. We believe hence we are very well placed to leverage any upside, because we've used the opportunity last year and really kept our dealers at a very good stock level. Of course, right now there are, one is trying to build supply side, a lot of it at the supplier end rather than at our end, to be able to increase and cope with the demand. I mean, one has to see it in context of 2 years of back-to-back close to 20% growth. Yeah. Right. So, suppliers are getting in and we are in like close to peak season. So, I think that's one of the areas that we stay focused on. Globalization, I'm just kind of moving to your third area, has been a very important priority for us. We are looking at globalizing and we are looking at going beyond tractors into farm machinery. And that's the reason we've invested in alliances in Mitsubishi's agri-machinery business in Japan, a harvester company in Finland, which is Sampo, and 2 companies in Turkey, one in tractors, Erkunt, and another in farm implements, which is Hisarlar. So these have been kind of 3 very strategic plays that we've got into. We believe the future is going to be about creating technology which is going to become affordable. And one of the things we announced last week is the intention to set up a technology center in Virginia Tech in US. And of course, that will focus initially on our North American consumers and try and see what we can do by way of advanced technologies to make a difference to that consumer segment, but we will also look at it globally. We've also invested 10% in a company in Canada called Raison Aerospace, and they're in the precision farming space. So they're really into advanced robotics, artificial intelligence, where they're doing predictive, crop outcomes which help farmers either improve productivity or bring down costs. Now, that's a company which also has 2 other strategic investors. There's McCann, which is the potato company, and there's Monsanto Ventures. So, we go in as a 3rd strategic partner. So, we're looking at various initiatives which will lead and drive technology to improve farmer prosperity.
Okay,
But given that you're the market leader, do you enjoy pricing power as well when it comes to tractors and farm equipment?
I think the only straight simple answer to that is our margins.
No,
And you know, we have been delivering very good margins. So
no, that indeed is the case. I just want to understand, so how does this look in terms of going into the future with the breakdown of your business? Because largely, everybody associates farm equipment with tractors. So break it down for us and in terms of the product portfolio there is and where the focus lies and how much contribution will come from where, given all your R&D investments.
So I'm going to talk more current, because anything else will get us into the area of future and outlook. But directionally, if you go back 2 or 3 years, we were almost 90% plus tractors, and a lot of it was India.
Okay.
So let's say a very strong tractor India focused company. Today we have multiple companies around, many of them are into farm machinery. So Mitsubishi has a larger share of farm machinery business than tractor business. Hisarlal is not tractor at all. So a lot of our new growth initiatives are in the area of farm machinery. Roughly at this point of time, just to give you a rounded number, we are about 37-38% of our revenues global.
Okay. Is there scope for a strong operating leverage to kick in FY19?
It's completely a forward statement.
The reason why it's not a forward statement, I'll tell you, is because you know that demand is coming back, and when you're saying that you are negotiating with your suppliers, which then I see a lot of visibility. These are your own comments. I'm trying to put 2 and 2 together. If demand is back and if your capacities are running in full flow, then we know that there would be benefits.
Yeah, the one thing you are not counting is what's happening to commodity prices, right? So we have seen, in the last few months, but through last year, a global trend of escalating commodity prices. So you just have to add that to the equation.
Okay. And just to wrap it up, what we are discussing in today's disruptive world, we talk about electric cars, we talk about driverless cars, we are talking about innovation happening even in the tractor industry. Now, globally and locally, the difference is that in India, the farm patches are getting smaller and smaller.
Yeah.
Globally, that is not the phenomenon, and that's where technology comes to play.
Right.
So, where do you think the big trend for Indian tractor industry will settle? Because globally, you got mega companies who are just, cultivating lots of land tracts. They run into miles and kilometers. In India, they run into a few hundred yards now, and that is a big change.
Yeah, so our innovation challenge is that. Our innovation challenge is how do we bring technologies relevant to small farm holdings, which can enable them to prosper. So really that's what drives us, and that's where we think we'll make a difference. So we're not trying to play the game everyone else is playing. We believe that's where the Indian frugal mindset will come in and allow disruption to happen.
So for FY19, are you confident, excited, or optimistic?
Or cautiously
I'm
optimistic.
Right now.
And now you're grinning.
Okay, I appreciate your time.
Thanks a lot.
It's
Lovely
good.
being with you.
Likewise.
Thank you.
Thank you very much.
Thanks.
Coming to our studios.